Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York. It's Thursday, 13th day of August, and this is Trending Markets. After seeing such a dramatic decline over the last few days in the equities markets, U.S. equities markets, much of that in sympathy to recent activity by the Chinese government as they devalued their currency, we do have in essence, unchanged to slightly higher day. We're looking at the Dow Jones Industrial Average currently trading up about 13 points on the day, but as I said, nominal net change on the day, in essence, unchanged. That can really be illustrated when we take a look at a 480-minute chart, and this is the chart that we've been using for our channel lines. We absolutely are still within these cascading channel lines with a downward bias. There's no doubt about that. We can simply look at our highs and our lows. We did have this extreme low that came in the other day, but finished up impressively when you consider the low that it hit and the move that it had to go to move back to, in essence, unchanged. But after you look at these couple of trading days, of course, we had that tremendous rise in the market. This occurred, of course, on Monday. I believe 245 points to the upside. Following day, 200 points to the downside. We've seen a pretty strong recovery. I would feel much more confident on this recovery if we could trade and effectively close above this particular point or the midpoint on the channel line, but personally I don't think that it will do that by the close of markets on Friday. So it's something that I would look for next week, because it's important that we keep on this upward track and not drift back to the lower part of this channel. After having a one-day bounce to the upside, any kind of corrective move to the downside pressure that we have seen in crude oil has been really squashed quickly. We've got this market devastated as it moves below $43. That was our initial target, and that's when the market was trading at what, 47 or 48 per barrel. We really believed it could go to 43, and in fact it went there, bounced up, very small bounce, and now is trading off almost 3% on the day, over $1.15 lower on the day, $1.17 currently at 42.12. And when we take a look at the lows, we've actually breached the $42 point, 41.91, high 43.72, so quite an active day in the market. If you recall from yesterday's show, I talked about the fact we had just seen a small, very small bounce in the market. And I talked about the fact that if we had any kind of a rally, we are looking to initiate a short position into that rally. And also, if it really breaks below $43 a barrel, then we would look to initiate a short position there. That's exactly what we've seen today, and that is that break. And I also talked about the fact that I really believe that if we do see this break, we could easily move back into the 30s. And really, to make a case for that, I've pulled up a monthly chart. And this monthly chart, really what I want to hone in on, and in fact, let's kind of just blow it up for the chart itself, is the recent, well, not so recent, but the lows that we hit back in 2009. Market was trading roughly at 140 plus a barrel, almost $150 a barrel. And when it fell from grace, it fell and fell dramatically because it hit a low that I believe was about $32 a barrel. And you can see that low right in here. Of course, as I said, this is back in 2009, but what it does imply to me is that we do have historical precedents, technical data that supports the fact that we can see a blistering high market in terms of price this above 140 a barrel and actually dropping over $100 per barrel. Now, on this particular move, it's a little different. We started from just above 100, and then we hit a first bottom right in here at about 43. Market comes back up and then finds a wall of resistance at about $60. And now, on a monthly basis, if you take a look, dramatic fall last month, and we're plunging pretty hard this month. The reason for that, for this chart, being pulled up is that the breach below this point here signals a real potential for this market to move into this particular territory, which is at the beginning, of course, the high 30s, even into the mid 30s. I think that that's possible, and that is why we're looking for the proper point to initiate short positions in crude oil. Now, in terms of the currencies today, we do have the dollar slightly higher. Of course, after the move by the Chinese government, these currencies went literally volatile and did stomp us out on both our euro and dollar trade. We're going to be sidelined today. Probably tomorrow. The next set of trades that I'm looking to put on is to definitely get back involved in the crude oil market. We also want to take a look at the equities markets and see if we have had enough of a decline and we move back into rally mode. Now, the dollar itself, in essence, unchanged. As you can see, 96.39. In terms of the euro, that is also trading under some pressure this morning, but off very, very nominally at 111.50, call it. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review in trending markets. Bye-bye.